Oh, I mean, certainly China is a huge, demand driver for the rest of the region, precisely as you said.
True.
So I do think that if things do not go well for China, it's going to have knock-on effects for many other places in the world, including not only Asian countries, but also Europe as well, right? I mean, Europe has a lot of business and exports to China and is highly dependent on China. So I do think that there will be some tariffs on China. I think it's very unlikely that given the geopolitical situation that there won't be any tariffs on China. We do think there's a higher chance that allies like Mexico and Canada and maybe the EU get a slightly better deal versus the threats that he has mentioned. We hope to see that play out over the next 2 or 3 months. But certainly, I think everything is connected together. So I think Trump needs to realize as well that if certain parts, major economies start to suffer in a significant way from the trade policies, that the U.S. even itself is not going to be totally immune from the total growth slowdown for the global economy.
What do you see, Helen, to be the big risk for 25? I struggle to think about one, which can majorly derail markets.
But that's a little bit concerning when we're struggling to think about risks. I think there's a couple of risks. I mean, the first one is really geopolitics, right? So it's all about the fact that good Trump has been well understood by the market, and bad Trump, like, nobody knows what it could be about. And every day we're getting these headlines that nobody, fathomed previously. So I do think that there is some potential risk from that, from the immigration policies, which might further restrict labor supply in the U.S. and push up inflation, from the trade policies that could, potentially be very disruptive to not only the rest of the world and the trading partners, but the U.S. itself as well. If you look at all these companies that sell into the U.S. or U.S. companies, a lot of them, for example, source a very significant portion of their products, from Mexico or Canada or elsewhere. So cutting that off or imposing huge tariffs is going to be extremely negative from a consumer perspective and from a corporate profitability perspective, potentially. So these are all the key factors. The other thing I think is to watch very closely the Treasury yield. Obviously, it moved towards 5% earlier, and everybody was quite euphoric about Trump's initial policies, so the market didn't react too much. But if it really hangs there for quite a long time, and let's say the rate cuts really get priced out to a significant degree, then people will start to worry about the cost of capital and all the related issues, and the negative implications in terms of valuations of risk assets as well. So that would be the third concern that I have, especially against the backdrop of very, very extreme and heavy positioning in U.S. dollar, in risk assets, et cetera.